Hi, this is Randy Finney with Right Side of the Chart, and today is October 30th, 2012. In this video, I'd like to do an update to the post that I made on October 21st covering one of my favorite sectors on the short side right now, which is the biotech sector. In that post, I had listed 14 stocks belonging to the NASDAQ biotech sector, 14 of my favorite individual setups. I'll cover those charts tonight, touch on those real quick. And before we do that, let's start out with the ETF that tracks that sector, the IBB. That's the iShares NASDAQ Biotechnology Index ETF. Here's a chart. This one's an active trade on the site, and as you can see, pretty clear stuff. A nice rising wedge pattern. We're looking at a daily time frame here, and if you look down below, you can see some clear negative divergence put in on the MACD and the RSI on that rising wedge. And we had a very clean, impulsive breakdown of that wedge recently, and prices continue to fall and have a way to go until my first target. At this time, if the market continues to play out the way I think it will, my preferred target will be T3, my third and final target. Whether or not I take partial or full profits here at the first target or second targets, that all depends on how the broad markets as well as this sector looks at the time. This is the IBB. It does, as I mentioned in the post, it's a little bit thin as far as the trading volume, so I prefer to use limit orders for entries and exits on the IBB. But there are some other options out there, other ETFs. There's the PBE, XBI, BBH. BBH looks pretty nice. The BBH is a biotech holders. The holders were really like first generation ETFs. I remember as a rookie back in Merrill Lynch in the mid 90s, we were selling these holder ETFs. The difference between the holders, I don't think anything has changed. When they created these, they cannot rebalance. So what happened, especially over the years, these holders tend to get very top heavy. Going from memory, I'd have to look this up, but I think the largest component of the BBH is Biogen, if I'm not mistaken. Here are the individual holdings of that BBH. Either way, I do prefer the IBB right now as far as the technicals go. So let's again jump back to that one real quick. And as you can see, we have plenty of room down to T1. As always, if you took this trade on the breakdown, that was the most objective entry. Right now, we are getting close to what I call technical no man's land. We're really in between support, which would be the first target, and resistance, which would be the next solid resistance level. Well, we can put horizontal resistance here. That's the 139 level. So if you were to enter this trade at this point, consider a stop not too far above 139. That looks like pretty decent horizontal resistance. We've gotten too far now to allow for a retest of the wedge as far as a stop parameter. So if you're in the trade and you entered up here, you can give it a little bit more room if you took it on the breakdown. If you want to enter around these levels, use that 139, maybe. I usually give a little bit of room above the resistance level. Sometimes the market makers will take it up, run the price just past a key resistance level to try to shake the shorts out. So give it a little room there if you're going to enter the trade here. And let's go ahead and dive into these. First one on the list is Biogen, BIB. And this one has been listed as a trade setup on the site for quite a while, and it's continued to grow and build within this long rising wedge. If you take a look down at the bottom, you can see how large the divergence is. In fact, we'd probably have to jump out. Let's look at a 2-day chart. It shows a little better. Here's a clean view of that wedge on the weekly chart. And take a look over here at the volume at price. As you can see, a lot, and this is going back to all the way back to 2003. Biogen for years traded in here, in this level, built up a large base, broke out of here, and as you can see, the volume has been very thin, relatively speaking, on the push-up in this bearish rising wedge. So I do believe if the market is looking at a sustained sell-off or downtrend here, This one has a good shot of coming all the way back to this target on the weekly, and that is the 84 and change level, which comes in somewhere around here. What I've marked, this chart looks a little bit busy. These are support levels, these brown lines up here. First target, this is T1 at the time, first target right there around the 122.50-ish level. Looking at this chart, I would say at this point in time I prefer at least T2. I do put these shallower targets in place because some traders might want to book quick profits or micromanage their trades around these levels where we usually see bounces. But if you take a look at Biogen, it's putting what looks like a nice little bear flag in place here since the breakdown. What we had on this one is a nice breakdown from the wedge. Prices pushed back up, made a perfect retest up at this level, and have since come down to set up in this bear flaggish type pattern. So if that's going to resolve, it'll probably resolve sometime this week, possibly next week. Things are a little bit behind here with the market closures over the last couple days. So let's move on. QGEN, QGEN. Okay, this one, I have had two trend lines drawn here. We've had a couple spikes below, and if you haven't yet entered this trade, then I'd hold off until this blue uptrend line breaks. Prices, we had a breakdown of this yellow uptrend line here, and that's why I've had this other uptrend line drawn. We did find support on it a couple days. The next time that level goes, I think, will be the last time, and I'd say QGEN has a very good shot of hitting this target here down around the 1480 level. I would put your stop right above the $18 level here. There's some horizontal resistance, so this one could be entered right now in anticipation of a breakdown for aggressive traders. Maybe a half position here and add the second half on a confirmed break of this uptrend line. Zooming out to the weekly chart on QGEN, if you look here, at least what I see when I look at this chart, very clear, very distinctive patterns of uptrends and sharp corrections when these uptrend lines break. Again, this is a weekly chart going back to 2003, and you can see these uptrend lines are pretty clearly defined, and once they break, QGEN looks to be a good short each time. And we have some really nice support here on the weekly chart. So for those longer term swing traders preferring to trade off the weekly frames, I would be looking at this 1237, 1240 area as a possible swing target. PCYC, this one I like as well. Very strong divergences. If you look down below on the MACD and the RSI, this one has just gone gangbusters all year, and I've been watching it for a while. I'm personally short this one, and what I've drawn here are a series of uptrend lines. A lot of times in a strong advance, you'll have a series of increasing uptrend lines with increasingly steep slopes. And now we see these uptrend lines starting to crack, which is signs that the uptrend has probably come to an end. And we've just now broken below the second uptrend line. Prices, if you zoomed in on a shorter term time frames, this would look like sort of a flagging action here. This one is offering a very objective entry at this level, just below this trend line with a stop not too far above. First target's down here. Second target would be this longer term uptrend line that's highlighted right here, and we won't know where that comes in until prices get there. T3 and T4, I believe I've posted this one on the site. Again, all these trades that I'm going over were mentioned back on that post on October 21st. I didn't have time to post all of these on the site, and so that's why I'm doing this video. Some of these I will post static charts if I haven't done so already. Okay, next one, ALXN. This one has played out pretty nicely since posting it, this idea back on October 21st. So a lot of the, in fact, this one's already hit the first target that I had drawn on the chart. So at this point, I would wait for another move below this T1 level. It looks like price is slightly overshot that horizontal support level. came back up. They're teeter-tottering around this level, and on the next solid move below this T1 level would be the next entry. And if you look over here at the volume of price histogram, it's very thin between here, so I expect prices to move down relatively quickly if we do get away much below this T1 level again. So T2 is at this time my final and preferred target. But again, I'm waiting. I wouldn't enter this trade until we see it go down here, unless you've already taken it up here, in which case you may want to adjust your stop. Possibly allow for a retest of this uptrend line. If we go back to a 2-day chart, you can see this blue uptrend line comes in pretty well, and then zooming back into the daily chart. So I would personally give this room, if you're already in it, to allow for that retest there. VRNM. When this one was posted, we were sitting right on this shelf of support here back on the 21st, 22nd, and it broke down shortly thereafter. And as you can see, there's been some impulsive selling on that break of support. So again, if you took this trade, I don't believe I had a static chart up at the time of this, but I did mention the name, and that was a pretty clear support shelf. So again, if you took that, these are my targets, T1, T2. I'm partial to T2 as a swing target here. If you're looking to enter a trade like this, again, it's in that technical no man's land right in between support and resistance. So if you were to short here, you'd have to be prepared for a possible bounce back to retest that support level. So personally, I wouldn't advise that. I would wait, keep an eye on the stock. If you like the pattern, maybe short on as it gets close to retesting this support level. You could short it up there if it does bounce back with a stop not too far above. And again, if you're already in the trade, that's where you'd want to set your stop, or you might want to ratchet your stop down a little bit lower, and then consider taking some profits off here at T1, or if you're a longer term trader, T2 would be my final and preferred target at this time. Okay, here's CELG, CELG Corp, and this one looks like an objective entry at this level. You had this nice, clean, well-defined uptrend line here, which prices broke below. There was a very impulsive selling. This was a horizontal support level here, which we've taken out. Prices have looked to come back up, and if you look over here to the right margin, we're at the 75.20 area. So prices are, again, this was where we closed Friday. I'm doing this video as I speak. It is about 2:30 Eastern time on Tuesday, with the markets being closed today. But we closed up around the 75.20 level on Friday, and this is a very solid now resistance level, so I would say this is an objective short anywhere around this level where it closed on Friday, with a stop not far above this line. And by not far above, let me define that. Biotechs, as I mentioned, are very volatile stocks. I wouldn't set a stop a few pennies above this line without expecting to being stopped out. So consider a stop roughly 2% above that. Gives you very good risk versus reward return all the way down to T2. T2 is my primary target. Oops, let me move this back. There. Okay, T2 is primary target. That's around 68.05, so I would set your limit order to cover just above that level, and that's CELG. Okay, this is MDCO, and this is a very, very nice looking pattern. When I first made the post on the 21st, that stock was up around this level here. So congratulations for those that jumped in. That one had recently broken down from this nice rising wedge pattern. As you can see, divergence is in place below, and has moved down quite nicely. Already hit the first target that I had, but I do favor T3 on this trade. And although things have played out nicely so far, if we take a look here, that would still be from this point. You'd want to make sure it moves below this T1 before entering, if you haven't done so already. This first target level right around where we closed on Friday, around the 2250 level. So another move below there, and that would still give us about a 15% gain down here to T3 if we break below there. So a lot of meat left on the bone on this one, even though it's already done well so far. IMGN. Some of you might remember this was a recent short on the site a couple months back, and yeah, they got me on this one. They had a nice fake down. This is a 2-day period chart. There's a large rising wedge type pattern. Divergences in place below. I had showed this chart before, and we had what looked like a very impulsive, solid breakdown of that trend line. I'm zoomed back into the daily chart now, and that proved to be a fake down. Stock prices shot back up inside the wedge, stopped out that trade, and you know, I always say if at first you don't succeed, try again. No, but in all honesty, folks, these fake down patterns, we've seen tons of these in the last few months as this market's been ramped into the highs. I'm talking the broad market as a whole. A lot of patterns we've seen a lot of wedge overthrows to the top, and a couple months back we did see a lot of false breakdowns, and in my opinion all that serves to do is to clear out a lot of short interest in the market. And when you clear out a lot of short interest, that sets you up for some major corrections, major downside. So I think that's the case here. I'm sure a lot of shorts piled into IMGN here and were burned when the stock came back in the wedge. And so, as you can see here, it broke down this time recently and has played out. And when I mentioned that back on the 22nd or 21st, we were just up inside this wedge, back on that trend line. And the old charts could have been referenced on the site. And we broke down from there, and this trade is already up, I believe, 20% from that post back on the 21st. So, and it still has some room to go. T1 here is first target, and I do prefer T2 on this one over time. Okay, REGN, here's a very nice looking one that is still offering an objective entry. Nice negative divergences on place on the highs on this stock. I have two patterns. If you look at this upper line here in the bottom blue line, that forms sort of a wedge type pattern, as well as these two blue lines which form a an ascending channel. And we've broken down. Friday we had a nice impulsive breakdown of that channel. Prices are clearly below it, and T1 looks like we have a good shot of hitting T1 over time. There's some minor support levels on the way down there, but over time I do favor T2, especially once this T1 level goes. You know, the way I might trade something like this, we have a thin zone here. If you look to the left on the volume at price histogram, price is just ripped up here, so there's very few trades occurred at this point. So it's similar to a gap, and what I would expect is as prices approach T1, we'll probably have some type of reaction. Prices may catch support, could last for a day, could last for a couple weeks. Then I would expect T1 to break and prices to quickly move to backfill that thin zone and ultimately hit T2 over time. So this one could work out to be a nice swing trade. Stops on this one if you take it. As I said, I still think it's an objective entry at current levels. I would put a stop somewhere over the recent highs, roughly the 166 area, somewhere around there. XOMA, this one still looks like it has a lot of room to go. We have this nice clean up trend line here, which was broken back on the early October, and when I had posted as a trade idea that I liked, I was watching this support line, which since broke down, as you can see here, and we've had some nice selling since that support line was broken. So this one is still offering an objective entry here. It'd be nice to see a little kickback towards the support line if you don't already have a position in the stock. And if you do, just set your stop above that support level. Or I should say it is now resistance. Set your stop somewhere above that resistance level. But here's the target down here in the looks to be about the 227-ish area is the one and only target on this trade at this time. Okay, two more to go. Here's VRTX, and this one looks like a nice clean up trend line break here. Prices came down, hit this support level. I have the support line here. So this one would actually trigger a long entry. If you're not already short this stock, I would wait until this level, around the 47.90-ish level. Wait until that support level breaks. It looks like we have this thin area with this large gap here, and my target is right here around the 43.18. We'll call it. I'd put your limit to cover order just above that, 43 low 20s. So 43.22, 43.25, somewhere in there would be a good target for that stock. Okay, and the last one, AMGN, AMGN. Okay, we're looking at a daily chart, as most of the charts that I covered here tonight were daily time frames, unless I specified otherwise. If you take a look at this line, we have a large ascending channel, slightly contracting channel, and within that channel, I have highlighted this yellowish line here. We have strong divergences put in place within the top of that channel. I don't even think AMGN has it in it to make another run at the top of that channel. Personally, I think it's an objective short here with stops not far over the recent highs. I could probably add another trend line here. Let's do that. I'm just eyeballing stock. Let's throw in this other trend line. And this would be, if I were not already short the stock, I'm sorry, wait for a confirmed breakdown of this pattern. So you have this wedge right here, a rising wedge pattern with negative divergences in place within this larger channel. And now let's zoom out. Oh, I'm sorry. Targets are here. I haven't labeled them as such, but these are the targets, and I'll put a static chart up on the site on AMGN soon. Here's a weekly chart. This is going all the way back. The previous reaction highs in this stock were back in 2005, so AMGN's looking at a possible double top. It's trying to challenge those highs. It's punched up through there, if you zoom in, and was unable to sustain that breakout to new highs so far. And looking at the price history on this stock, the odds of a stock breaking out to new highs and blasting off, of course, a breakout to new highs is typically a bullish event, but in doing so, look how overstretched we are. If you look at the RSI down here, this is the weekly chart again. When you have overbought levels, overbought readings on the weekly time frame like this, that's more typical of lasting tops. Look at the price action following these overbought levels in the past. So to think that AMGN's going to punch out here and just take off, sailing to new highs and keep going, being so overbought, highly unlikely in my opinion. And of course, I take that all into consideration with the daily charts as well, which confirms. So there's AMGN, first target down here, second target, and again, I'll try to update this chart on the site, as well as some of these other names that I haven't already posted the static charts on. Okay, folks, hope you enjoyed the video.